Hey everyone, welcome back to Corporate Dakota. Today we are diving into RetinalGenix's post-effective amendment No. 8. It sounds like some robotic eye surgery, but no promises. RetinalGenix is trying to prevent blindness with some interesting tech. We'll break down their plan, their struggles, and whether they can pull it off. Before, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this and other filings. This report updates their registration statement similar to updating your software. The reason? To include their latest financial results, which are never too exciting. They're also registering the resale of some stock by existing stockholders. RetinalGenix won't get any of that money directly, but they will get the money if some warrants and options are struck. These shares were part of a previous offering, so they already paid the registration fee. This report is required by the SEC since it allows existing shareholders to be able to resell their stock. The company paid a small $173 fee to register these shares for resale. Basically, shareholders want to be able to sell the resale shares. We will see if they do. One key thing, their stock trades on the OTCQB market under the symbol RTGN. The closing price back in June was $3. It'd have pretty high returns. Something to keep in mind, the OTCQB is different than the main stock exchanges. These are smaller and often carry higher risk. Now let's get to the point, the risks. An investment in RetinalGenix involves significant risks as outlined at the front. You should really only invest if you are ready to lose all. Here are some highlights. No revenue and uncertain profitability, never the ideal candidate, more capital to fund operations, aka potential dilution for existing stockholders. With the money raised, ECAM doubt about their ability to continue as a going concern. Now, speaking about those risks, since RetinalGenix is a company that looks kind of risky here is their accumulated deficits. We can see that it's continuing to increase, which is never ideal to see. So there may be substantial doubt about their ability to continue as a going concern. Let's scroll down to business overview. RetinalGenix is trying to make things for vision screening and early detection of disorders. They're focusing on two main devices, portable retinal imaging screening device and retinal cam, and in-home monitoring device. Retinal cam has been planned to launch at the end of this year. They're trying to create two new pharmaceutical products for dry AMD, also known as age-related macular degeneration, known as RTG 2023. The other one, RTG 2024, used to treat Alzheimer's syndrome. Here's the thing, they need an estimated $6 million to complete product development, get FDA clearance for RetinalGenix, develop software and build up their infrastructure. They plan to raise that money through stock or debt sales and or partnerships. But honestly, there are no promises it will happen. They don't expect to see any revenue unless they successfully commercialize products and gain regulatory approval for the assets they're developing. Translation, they are dependent on potential securities sales to stay alive. Back in July of 2022, RetinalGenix bought DNA Jackie PS Inc., a pharmacogenetics company. It looks like they were hoping to combine genetic mapping with retinal imaging. They want something to diagnose systemic and retinal disorders, targeting diseases like cardiovascular problems, Alzheimer's, and Parkinson's. Supposedly, doing these diagnostics is faster and cheaper than using stuff like MRIs. According to the report, they engaged with a design firm to accelerate its timeline and hopes to make a prototype for the fourth quarter of 2025. The group had some phlebotomists do some work in Q4 2024 with Seven Springs Surgery Center. The report mentioned the group filed 2 provisional patents for RTG 2023 and RTG 2024. They're also trying to launch a clinical study that will validate anti-VEGF injections for people with wet AMD. Now, it's time to look into the summary of those risks to recap and highlight what we're just discussing. The first risk, we're talking about our financial position, is that they have had net losses every year and expect to continue to do so. They also mentioned that internal controls over financial reporting may not be effective. This means they cannot accurately rely on the financial data that's been produced. Another major risk from the filing involves product-related operations, including inequality or delivery expectations from customers that are not met. The report also mentions there are risks when it comes to intellectual data. These include whether their intellectual property may not be sufficient enough to protect products, or the lawsuit for patents could cause to incur substantial liabilities. There's the risk of the government regulating drug price negotiations. There's numerous government regulations regarding medical devices and drugs. They need to get FDA clearance and regulatory approval, along with legislative form of the healthcare system in the US that may impact business. Aptoy know that they've been warned. Let's switch gears and actually dig into those numbers. We will take a look at table of contents and go over different financial documents and reports, starting with report of the independent registered public accounting firm. The auditor, Liebman Gobber and Himowitz LLP, gave an opinion on their 2024 and 2023 financials. The big warning: there is substantial doubt about RetinalGenix's ability to keep operating December 31, 2024.